I welcome you guys to this beginners bootcamp. So for those that don't know me, I'm very sure most of you guys are not familiar with me because it's more like a beginners session. So my name is Casey, also known as Trading with Casey. I'm a Forex trader. I'm an indices trader. I'm also a stock trader and a crypto trader. So I trade the financial market with about 3 years of experience. So I've been doing this for over 3 years now. And so far, so good. It's been good, and I decided to just give newbies opportunities. Okay, so I urge you to take advantage of this opportunity that you have now. You are very much aware that it is free. I didn't charge you guys for anything. So all you just have to do is come. If you are a Forex enthusiast, or someone that okay, you've been hearing about Forex trading, probably you don't know how or what it entails, and you are very much interested, then definitely you should take this bootcamp as serious as possible. And even if peradventure, after the bootcamp and you feel like, okay, I really don't like this type of hustle, or I don't like this type of skill set, then that's fine. Okay, that's very, very, very much fine. So you just have to find your path by the end of the day. And if trading is something that you like and you want to do, then of course you can always give it a trial. All right. So before I proceed, I would like to first of all educate you guys on something that I found very, very important and crucial. Now, trading is a skill set. It is a what? A skill set, meaning it is something that you have to put your mind, you have to desire it, you have to be ready to go through the process for you to be better at it. Please, this is not a get rich scheme platform. This is not a get rich scheme class. So if our venture you felt like, oh, maybe this is a get rich scheme class, or maybe the person that sent you my link, or maybe you I don't know how you happen to get in contact with this particular class, but I'm telling you now, if you feel this is a get rich scheme class, or you entered because you assumed it to be a get rich scheme class, there's room for you to leave the call right now. Okay, because um I don't want bad blood. You know what I mean by bad blood. That is those that came with a very wrong mindset. I don't need them here. All right. I need only those that know what they want to venture into. I'm very sure that before you click the link to join the group, you must have done your own little research. Okay, you must have done your own little research about forex trading, and I'm very sure most of you guys most likely must have heard about it. So um, it's not something that is so new like that. All right, but I want you to know that it is a skill set and not a get rich scheme platform. I'm not here to teach you how to double your $100 to $300, or I'm not here to teach you how to double your $300 to $1,000 in one day or 2 days or one week. I'm here to teach you solely about forex trading or trading in general. Then, if it is something or if it is a skill set that you would like to proceed further, then that's fine. That's on you to make the decision. All right. And another thing is that I want you guys to know is that in trading, you have to treat it like a business. Okay, so this is not different from whatever business you are doing. It's the same thing, just that the businesses have different niche. There are different niche in businesses, right? This has to do with the business that has to deal with the financial world. Okay, so we are dealing with finances, we are dealing with money, we are dealing with currency. Please take note of what I am saying. So there is still room for you to leave if you are not supposed to be here. There is still room for you to leave. Don't come and pollute the air right now. And for those that are spamming any little option you see, you want to spam my call, I will not accept that. Okay, so the moment I think I removed one person that tried to spam the message box. So the moment I observed it, I had to just like I exited it from the group. So if you are an intermediate trader or probably you are idolo, you have no business here. This is for newbies. Please don't stress me, okay? I don't like stress, so don't stress me. Just allow me to give you what I want to give you, and then you will learn. And I'm very sure the serious ones among you guys will definitely be grateful for this opportunity that I am giving to you guys right now. So I'm going to, after the call, I'm going to drop my social media handles so that you can do your research about the person that is teaching you or the person that is lecturing you about this new beginner's guide in Forex trading. Okay, I'll drop my social media handles, including my Instagram, my X account, and also my Telegram handle, so that you can go there and you tend to see the person that is teaching you. And just as a means of knowing where you are learning from, knowing the person you are learning from. So it is very much important that you know the person that is teaching you and educating you about trading. Okay, now I've spoken so long. I'm very sure that many of you guys here maybe you've had a bad experience in trading, or maybe you've been lured into trading and maybe you've lost some money, blah, blah, blah. That is your experience, which is okay, which is fine. Okay, this is a scheme that is highly volatile. The trading or the financial world is highly volatile. When I say it's highly volatile, meaning that it comes with a whole lot of risks. Okay, it's a highly volatile market. So take note of that. I know I'm saying all this so that you know what you're about to venture into. So it won't look like, oh, trying to, to make things sweet for you. It's as easy as that. So let's begin right now. So what exactly is trading? What exactly is trading? So before I proceed, let's see the little introduction. It says turn knowledge into profit for turn knowledge into profit. Forex for beginners. So says welcome to this beginner friendly Forex trading course designed to take you from zero knowledge to solid understanding, blah blah blah. So this is just me trying to introduce you into trading, which I spoke about before I like introduced myself and all that. So let's proceed further. What is Forex? Forex has to do with, or Forex means foreign exchange. The word forex means foreign exchange. That is the act of you buying one country currency in exchange for what? Another country currency. Forex means foreign exchange. Please don't confuse it to forest. It is not forest because I noticed that there are so many newbies. There are so many newbies that we pronounce it as forest. It is not forest. It is called forex. It is called what? Forex, which means foreign exchange. The process of you buying one country currency pair in exchange for another country currency pair. That is, it is a marketplace that has to do with currencies. And we have diverse currencies in the world. We have dollar, we have New Zealand dollar, we have the Canadian dollars, we have the Japanese yen, and our Naira, for those that are in Nigeria, Naira, I'm very sure you guys are familiar with it. Now, this is a picture showing you what Forex is all about. As you can see, this is a dollar sign here, and this is a pound sign. Okay, we have dollars here, we have Naira here. What this is trying to tell you is just the process of you exchanging one country currency for another country currency. For instance, you are in Nigeria, and let's say you want to travel to, let's say, to Japan. Definitely, they don't make use of Naira in Japan, right? So it means that you have to go through the what? The process of changing whatever Naira you have into what? Into yen. Yen is the currency used in Japan. The currency we use in Nigeria is what? Is Naira. The currency used in United States is what? Is dollars. The currency used in Canada is what? Is Canadian dollars. So whenever you are changing your geographical location, going to another place, you have to exchange what you have for another country currency. Now, the process of you going to the bank, okay, and trying to go through that forex transaction what you are doing is called Forex trading. I believe this is as simple as possible. I'm trying as much as possible to make it as easy and as simple as possible. That even someone, I'm very sure maybe most of you guys have not heard about trading, you will understand it because I try to break things down as easy as possible. So you can see this is the picture. You can even see calculator here, right? So you are trying to check probably the rate of $1 to Naira right here. And then once you get the rate, if at present $1 is equivalent to I think 1,375 Naira. Okay, so if you want to change if you want to get $1, you have to deposit 1,375 Naira. That process is simply called Forex trading. Now, you might want to ask for those that are in Nigeria, be like, okay, what about all these Aboki guys? All these guys that are always close to the bank. You see them telling you, they call it the change, yeah, something like that, right? They are also Forex traders. They go through Forex trading, but the only difference between what I am teaching you and the transactions that those guys usually do, or the transaction that you are doing in your bank, is that this is more of an electronic way. That is, all you need is your laptop or your gadgets, whatever phone you are using, whether you are using an iOS or whether you are using an Android, that is all you need. With the right knowledge, and you are good to go. That is why I said it is a skill set. Before I started, I had to make sure that you don't come with the wrong mindset. So I'm not here to tell you bring $500. Yeah, let's triple it and let us make $2,000. No, I will teach you how to do it. I will teach you the basics. All right. Then you are going to now learn the technical know-how about trading, and that is what I'm currently showing you at present. Okay, so I hope you guys are following diligently. So this is a brief introduction into what into Forex. We are doing it the electronic way, and I'll show you how we are going to be doing it the electronic way as we progress with the what with the bootcamp. So this is another picture right here. It says who moves the market. Now the market comprises of two participants. The market or a marketplace comprises of what? Two participants. Who are the participants in the market? We have the buyers and we have the sellers. Real life situation, right? If you want to get, let's say you want to buy a bag of rice, definitely you are the buyer, right? So you need someone that will sell you bag of rice. So what will you do? You go to the market, you give the seller your money, and the seller gives you what? The bag of rice. Okay. Now that place where you guys are going through that transaction is simply called the marketplace. You want to get a pair of shoes. What will you do? You have to go to a store where you can get the shoe. You give the seller money, and the seller gives you the shoe. That place where you undergo the transaction is called the marketplace. The same thing is what happens in the what? In the financial world. The financial world comprises of two participants. It is either you are a buyer or it is either you are a seller. All right. So take note of that. That is what markets is trying to see. All right. Now it says you are not trading against your friend. You are trading in a market dominated by banks and institutions. I repeat, it says you are not trading against your friend. You are trading in a market dominated by banks and institutions. That is why we usually say that in trading, anybody can succeed. Anybody can succeed. You can be a newbie, okay? You can be a newbie, and in less than 6 months or even 5 months, depending on how serious you are or how committed you are, you can even be much more successful than your mentor. It is 100% possible. You can gain success much more than your mentor. That is why we usually say Forex overtaking is allowed. There's nothing like, oh, because someone mentored you, then it means that the person will always be or more successful than you are. Nothing like that. Because I am not trading against you. My money doesn't affect your money. Whatever profit I make from the market has no business with what you will have to make from the market. Why? Because the market is dominated by the banks, the big players. They are the ones that are responsible for the movements in the market. I'm going to show you all that. Take your time, relax, and follow up. Okay? It is the big banks that are responsible for those movements that you are seeing in the market, the institution, hedge funds. So you and I, we are called retailers in the market. We are called what? Retailers. Who are the retailers? Retailers are the smallest units in the marketplace. The smallest unit in the marketplace. That is, those maybe $5,000 you think you have, you are using to trade. We are retailers. Even if you are trading with a $1 million account, you are still a retailer. You are trading with a $10 million account, you are still a retailer. Why? Because these hedge funds, they are always trading with billions and billions of dollars. They are trading with what? Billions and billions of what? Of dollars, including your bank. That bank you are banking with. Maybe if you're in Nigeria, you are using First Bank, you are using UBA, you are using Union Bank. Those guys undergo Forex trading. They undergo what? Forex trading. So take note of that. So that's why I said who moves the market? Simply the banks, the institution, and what? Retailers. Now let's take a step further. Know who moves the market. Okay, I've explained that. Now let's now talk about currency basics. Now, since I'm making reference to Forex, Forex has to do with what? Currencies, right? If you remember when we started this lecture, I showed you this picture. These are currencies, right? Good. So it means that if you are a Forex trader, you are dealing with what? Country currencies. If you are a Forex trader, you are dealing with what? Country currencies. If you are a crypto trader, it means that you are dealing with what? Cryptocurrencies. If you are a stock trader, it means that you are dealing with what? Stocks. If you are indices trader, it means you are dealing with what? Index in the market. Now, the process of you performing that act is simply called trading. That is why when I introduced myself, I said I am a stock trader, I am a crypto trader, I am a forex trader, and I also trade indices. Those are the markets that I venture into. But the act of buying and selling is simply called trading. All right. So when you go further into trading, when you learn the basics of trading, and you decide to go more into the advanced stage of trading, okay, then after you knowing how to buy and sell, then what will you do? You now choose the marketplace you want to venture into. Okay, you then choose the what? The marketplace you want to what? Venture into. That is either cryptocurrency, either forex, either indices or stocks. All right, we have bonds, we have ETFs, and the rest. There are so many. I will show you as we progress. Okay, now we have currencies here. So currencies are always traded in pairs because you are comparing value. Currencies are always what? Traded in pairs. These are the major currencies we have. These are the major currency. When I say major currency, from the word major, it means things that are or currencies that are of major importance. That is currencies that have very strong economic activities. Their economy is very sound, the economy is very strong. That is why they are called what? Major currencies. And the major currencies we have here, they are Euro USD, we have GBP USD, we have USD JPY, we have USD CHF, we have USD CAD, we have AUD USD, and we have NZD USD. EUR USD means Euro USD. EUR stands for Euro. USD stands for what? United States dollars. GBP stands for pounds. USD stands for US dollars. Same with this US dollars. JPY stands for Japanese yen. All right. JPY stands for what? Japanese yen. USD. CHF stands for Swiss franc. CHF stands for what? Swiss franc. That is those in Switzerland. Okay. We have USD card. This card here stands for Canadian dollars. AUD USD. AUD stands for what? Australian dollars. NZD stands for what? New Zealand dollars. All right. So these are the major currencies. And like this statement says, currencies are always traded in what? In pairs. They are always traded in what? In pairs. That is, you cannot just walk up to the bank and say, oh, you want to sell your dollars. Okay, you want to sell your naira. With what? What do you want to exchange it with? Nothing. It's not possible. Except if you just want to deposit in your bank account. But if you want to undergo any form of Forex transaction, you have to trade one country currency in exchange for another country currency. That is why this statement says that they are always traded in what? In pairs. That's why that statement says they are always traded in what? In pairs. Now, let's now go to this statement. It says base and quotes. In Forex, currency pairs is made up of base currency, which are always the first currency. So any currency that comes first, they are called the base currency. And the ones that comes last, they are called the quotes currency. So this first one is called the base currency, and the last one is called the quotes currency. This is the base, this is the quotes, this is the base, quotes, and you follow all the way to the last one. All right, now let's take another step further. Now, this is called terminologies in Forex. Now, remember I said that we are dealing with Forex. So it means I'm going to be paying major attention to what currencies. Okay, I'm not going to teach about crypto here. I'm not going to make anything, make mention of anything about crypto. It's just only going to be what? Forex. Okay, to be majorly be what? Be Forex. Now, terminologies in Forex. Forex. The first one is long. Long means to buy. I'm going to show you some practical examples of this. So just be patient. Let me just read through what I have to read through. And then go to the practical session and I'll show you what I need to show you. Okay. Now, long means to buy. Short means to sell. Long means to buy. That is, you want to buy a particular currency in exchange for another currency. That is called longing. So if I tell you that, oh, Mr. Richard, go and long GBP USD, what I'm trying to say is, Mr. Richard, go and buy GBP USD. Pay attention. If I say, Mr. Richard, go and long GBP USD, what I'm trying to say is, Mr. Richard, go and buy GBP USD. If I say short, it means to sell. So if I say, Mr. Richard, short GBP USD, what I'm trying to tell him is sell GBP USD. If you notice, I'm making use of the two major words that are in the marketplace, that is the buyers and still the sellers. All right. The next one is bullish market. Bullish market is a market that is going upward. Bullish is a market that is projecting to the upside. So any market you see that is pushing up like this, it is simply called the bullish market. Okay, any market you see pushing to the upside is simply called the bullish market. Then any market pushing to the downside, that is anyone coming down like this. Anyone, please mute your mic. Mute your mic. If you just join, mute your mic. So anyone coming down like this, it's simply called the bearish market. Anyone coming down is simply called the bearish market. Now, take note that all buyers want to long the market. All buyers always want to what? Long the market. And all buyers is equals to bullish markets. This is the cheat code for this so that you don't have to cram anything. Pay attention to the basics. Pay attention to what really matters here. Okay? How you will learn how to do things better is when you learn the psychology behind it. That is the best way to learn, whereby you won't have to cram anything. Just understand the psychology behind anything, and it becomes very simple for you. Okay, so this long is equals to bias, and bias is equals to what? A bullish market. What is a bullish market? A market that is going upward, like this one now. This is moving upward, right? So that's a bullish market. This one is a bearish market. Why? Because it is projecting to the what? To the downside. Okay, it is projecting to the what? To the downside. Now, who are the bulls in the market? Bulls are buyers. So let me give the short for the other one, which is bearish. Short is equals to sellers, and sellers is equals to bearish markets. Sellers are equals to bearish market. A smart student here will get, I'm sure you should have, I gave the notifications in, so you have gotten your journal. And as I'm teaching, you are taking note of things and you are learning, writing down things so that you can always study. But I'll maybe drop the video. Maybe I'll drop the video. I think I will drop it. I'll drop it so that at least those that were not able to join can also have access to it. Okay, so you can learn. Just that the way you guys are spamming my group, I don't even understand. I'm very sure if I mistakenly open that group, it's going to be hell. Like the way they are spamming, I don't know. I don't know why. I don't know why. Well, it's fine. Now Nigeria within now, so I don't know why people are always trying to act smart. Can't just go through the process, learn how to do something now. Give it your time rather than trying to find shortcuts to looking for how you can scam people online. If you are good enough, you don't need to come and spam me on that person group. You have your platform, then you should be able to put yourself out there if you really know what you're doing. So you guys should be careful, especially as a newbie, because you fall into the hands of so many wrong people. Just be careful and always do your research. So bulls are the buyers in the markets. Bulls are the buyers in the markets. Then bears are the sellers in the market. Bears are the sellers in the market. Now, ranging markets. This is a market that is ranging, that it is neither moves to the upside nor to the downside. Don't worry about this. I'm going to give you a very practical example based on everything that is here. I'll give you a practical example. So just relax. Okay. A trending market is a market that is neither going upward nor downward. This example that you are seeing here, this one is going upward, right? This is going downward. A ranging market is a market that is moving in sideways, more like a wave. Okay, more like a what? A wave. You know, wave move from crest to trough, trough to crest and the rest, right? So this is more like a wave. So this is called a ranging market, or we can call it
I don't understand this ranging
alternating market.
market.
Please, I'm not giving you room for questions now. After the class, I will give you guys room for questions. So just pay attention. When I'm done teaching, then I'll give rooms for questions. So for now, listen first. Okay, just listen. Now, this is called a ranging market. Why? Because it is a sideways market. It is neither moving upward nor moving downward. It is neither moving upward nor moving downward. Like you can see, this example here is neither moving upward nor downward. This one, you can see it's very clear to the eyes that this is moving to the downside. This one is very clear to the eyes that it is moving to the upside, right? So that is the difference between them. Now, let's now go to a trending market. This is meant to be trending, ing. Sorry about this. This is a mistake here. Meant to be trending markets. Now, what is a trending market? A trending market is a market that is either moving upward or downward. Upward or what? Downward. That is, it is either going up or down. That is what we mean by a trending market. A trending market is a market that is either going up or what? Or going down. A trending market is a market that is either going up or what? Going down. That is, we now have two segments. So trading market is divided into two sectors. Trading market divided into what? Two sectors. This is simple, don't worry. You see the practical example. Now, we have upward movement, or we can call it uptrend, and we have downward movement, or we can call it downtrend. All right, so anyone, upward movement or downward movement. Now, the upward movement says still the same. This upward movement is still equivalent to your bullish market. That is the market that is projecting to the upside. But how do we identify an upward movement? It is making series of higher highs and higher lows. This example that you can see here, this market is projecting to the upside, right? So how we identify an upward movement is a situation where market is creating series of the higher highs and higher lows, breaking structures to the upside. Now, this example you can see here, this is market breaking structure to the upside. Breaking structure to the what? To the upside. These highs that are being broken, they are called the higher highs in the market. These lows that you see price not reading, right? You can see that price is not reading these lows. They are called the higher lows. So this is higher high, higher low, higher high, higher low, higher high, higher low, higher high, and what? Higher low. So this is an example of what? A what? A trending market, or we can say an uptrend, because I said it is divided into two segments, uptrend and what? Downtrend. So this is an example of what? An uptrend. What is the characteristic of an uptrend? A market that is creating series of higher highs and higher lows. That is what you need to pay attention to. Remember, I told you how to learn. I've given you a very vital hint on how to learn. How do you learn? You pay attention to what? To the psychology behind that thing that you want to learn, right? So this is a perfect example of it. Please, no question for now. Precious, you're raising your hand. No, just wait. Be patient. Please, be patient. I will give rooms for questions after the class. Okay, you ask as many questions as you want to ask, and then we'll call it a day for today. Then we'll round up everything tomorrow. Okay, just allow me teach for now. Okay, now the next one is a downtrend. What is a downtrend? A downtrend is is a type of market trend that is breaking structure to the downside. You see that uptrend moving up, downtrend moving down. You can see that it is very simple. It is not hard. You just need to pay attention to what that word is saying. That is why we call it terminology. All right. Now, a downtrend is something like this, projecting to the what? To the downside, breaking structures to the what? To the downside. How do we now identify a downtrend? Because it is making series of lower lows and lower high. So this is lower low, this is lower high, this is lower low, this is lower high, this is lower low, this is lower high. Okay, lower low, lower high, lower low, lower high, lower low, lower high, and what? Lower low. So this is how we identify a downtrend. A downtrend breaking structures to the downside. Uptrend breaking structures to the what? To the upside. As easy as that. Now let's now take another step further. Let me erase all this out. Um, okay, so let's proceed further. Let me wipe off all this stuff. Okay, good. Mm, all right. So let's proceed further now. Now let's go into pips. This is another type of, this is also a terminology in what? In trading. What is pips? Pips is the smallest unit of what? Measurement in the market. That is, true pips is how we measure how price is moving. What is the unit of measurement for time? Seconds, right? What is the unit of measure? If you want to measure your temperature, we make use of thermometer, right? If you want to measure distance, we make use of meter, right? Good. Now, the unit of measurement in the marketplace. The unit of measurement in forex trading is called pips. The unit of measurement in forex trading is called pips. Now, as a newbie, don't worry about. I'm going to send you guys. I'll send you PDFs. Okay, I might send you my PDF. I'll send you my PDF. Just that I'm worried because of these scammers that are just everywhere. I don't know. Before they will start monetizing my PDF and keep sending it to people. So I might give my PDF. I might drop my PDF, but if I don't drop my PDF, I'll give you the PDF that know that at least it's everywhere for you guys to consume. Okay, so you also have access to everything. So just relax. In case I'm too fast, in case you are not able to grasp everything at once, don't worry, it's a boot camp. You don't expect me to be teaching you guys for 1 week. I won't do that because I have other things. I have my students I need to take care of. I have myself also I need to take care of. Okay, so just pay attention and listen very well. Now, pips is a unit of measurement in the market. This is an example. This is Euro USD. Now, this number you are seeing here, this is the price of this pair. This is the price of what? Euros to dollars. This is the price. It's just like the price of dollars to naira is what? 1,375 naira. Right? That is for you to get $1. You will give whoever you want to give 1,375 naira. Once the person receives 1,375 naira, then the person gives you $1. That is the same thing that is here. So it means that 1,375 naira is the price. That is the current market price. And you know that market is volatile. Why we say market is volatile is because it varies in prices. That is why they will tell you trading is risky. You can lose money and you can also make money. So it is not a get rich scheme program. I'm trying to give you the right mindset so that you will understand and know what you're about to venture into. It is very interesting. It can help you. It will help you. There's light in trading. But if you have the wrong mindset towards it, you will not achieve anything in trading. So that is why you need to listen vividly to what I am saying. Listen very well. Now, after the decimal points, the fourth digit is your PIP. After the decimal point, the fourth digit is your what? Is your PIP. After the decimal point, the fourth digit is your PIP. So if I use this first one here, this is 1.1051. 1 is the PIP. 1.1052. 2 is the PIP. Now, this is not mathematics. For those that are don't be scared, yeah. I know that there are some persons here that don't like math. Okay, that's fine. Okay, trading is not about how brilliant you are. Trust me, trading is not about how brilliant you are. If someone that is a dollar in class, you will be a more better trader than the person that is coming out with first class. So this has nothing to do with how brilliant you are. Okay, trading just has to. There are so many things. There is also a psychological part of it. There's a psychological part of trading. Maybe if I see how you guys are coordinated in the group, I might decide to walk you guys through the psychological process. All right. So maybe just that the bad ones are just, they're trying to just spoil things for the people that are really, really ready to learn. But that's by the way, that's life. Now, this is simply what? Forex. The unit of what? Sorry, this is pips, the unit of measurement for what? Any currency pair. I don't want to dwell much on this. When I go to the charts, I'm going to show you and a very perfect example of PIP without even you stressing anything. There is a tool for this. I'll show you so that you know how to calculate it without stressing yourself. Okay, without stressing yourself. Now, what is spread? Spread says that it is the difference between your bid price and what? Your ask price. I'm very sure you guys are hearing about ask, bid, price, bid, ask. Now, let's scroll up. Let's scroll up. Let's scroll up. Let's scroll up. Now, this is bid price. What is bid price telling you? Bid price says that it is the price at which your broker, I will discuss about broker. Just listen. It says that it is the price at which your broker is willing to buy the base currency in exchange for the what? For the quote currency. This means that bid is the best available price at which you, the trader, will sell to the market. So the process of you selling to the market is called the bid price. The process of you selling to the market is called the what? The bid price. Then the process of you buying from the market is called the ask price. Trading has to do with one and opposites. If you know what is one, you already automatically know what is two. That is the beauty of it. Just like what I said here, I said long means to buy, short means to sell. So it is just one and opposites. So bid is the price at which you will sell to the what? To the market. Then ask is the price at which you will buy from the market. Okay, now let's continue. I hope you guys are enjoying the whole narrative. Now let's now talk about margin, leverage, and lot size. Now, what is leverage? Leverage is, it says this is the ability to control a larger trade size with smaller amount of money. It is used to express ratio like 1:50, 100. Now, don't worry about this. Okay, don't worry about this. Just know that leverage is the amount of money given to you by your broker to do business. I want to simplify it for you, okay, because that's the essence of this call. Simplicity. I keep things as simple as possible. I'll share you my Telegram channel. You have access. You have access to me. You have access to how I teach. You will see my videos there. You go. You will learn. Those that are serious, though. Okay, so you will see how simple trading can be. Okay, so just know that leverage is the what? Is the money that is given to you by your broker to do business. I will talk about broker when we get there. Just listen first. Okay, so if I give you, let's say you have $1,000 that you want to use to trade, and I'm giving you extra $10,000. I gave you $10,000. Now that $10,000 I'm giving to you is a leverage so that you can have a much higher buying capacity. That is what leverage is trying to tell you. Your real money is $1,000, but I am giving you $10,000 so that you can have access to bigger money. That is just what leverage is all about. And leverage is given to you by your broker. Leverage is given to you by your broker to do what? Business. Okay? As beautiful as that. Now let's talk about margin. What is margin? Margin is the actual amount of money we deposit into your broker so that you can trade. That's okay. Now let's go to lot size. What is lot size? Lot size is your buying capacity. Remember, we are dealing with currency. So let's assume that, let me look for one person in here so I can see Sean Morris. Sean Morris, let's say Sean Morris wants to he wants to buy, let's say, Euro USD. Sean Morris wants to buy Euro USD. Now, before Sean Morris buys Euro USD, he needs to have what we call buying capacity. Now, that buying capacity is now how much more does Sean Morris wants to buy euro in exchange for what? Dollars. Or how much more does he want to sell dollars in exchange for what? Euro. So lot size is simply your what? Your buying capacity. How much more do you want to buy a particular currency pair? How much more do you want to sell? That is simply what? Lot size. Now we're going deeper into things, as we proceed into things, it becomes more intense, but don't worry, just be with me. Don't be disconnected yet. We are just starting. Don't be disconnected. Just calm down and listen very well. Now, how does trading work? Very simple. Now, there are different ways you can buy and sell. There are different ways you can buy and sell. Now, these are the ways you can buy and sell. It says how to trade. That is, I can buy or sell using a buy limit order. Or I can buy or sell using a sell limit order. Same way I can use buy stop or I can use sell stop. These are ways you trade the market. I will show you how to do it. I will show you practical examples of everything. All right. So these are ways you can what? Buy or sell. Now, let's start with buy limits. This is a bit, you need to pay attention very well. And also when I go to the practical aspect of things, you also need to pay attention because it might be a little bit confusing, but you will need to write it down. All right. You will need to write it down so that you will see the differences when you are probably reading it. Okay. So let's start with buy limit. Buy limit is the process of buying below market price. You want to buy below market price. Now, this is the current market price. This blue line signifies current market price. The red line, you can see that this particular trader here is buying at a price lower because this is the current price. He's buying at a price lower for price to go up. Remember, buyers want price to go up. That is why you see this arrow pointing to the upside. That is, I want to buy at a more lower price. It's just like you are selling a pair of shoes. Let's say you are selling for, let's say 50,000 naira. You are selling a shoe for 50,000 naira, and I come to your store. I want to buy your pair of shoe. Now, and I now tell you that, no, I don't want to buy at 50,000. I want to buy at maybe 40,000 naira. Now, what I'm trying to do is I'm trying to place a limit to that shoe. So it means I want to buy at a price lower than the price that you are giving to me. The current price you are giving to me is 50,000, but I am telling you that I don't want to buy at 50,000. I want to buy at a more lower price, which is what? 40,000. That process is simply called buy limits. Then sell limits is the opposite of buy limits. Now, if buy limits is buying at a lower price, then sell limit is what? Selling at a what? At a higher price. Let's say everybody is selling that same pair of shoe for 50,000, but you are the only one in your store that is selling for what? Maybe 70,000. What is that? You are selling above the original market price that has been set for that goods or commodity. Please, I hope you guys are understanding the concepts. Okay, just understand if you know one, the opposite of that one will be the other one. That's why I said it is all about words and opposites. All right. Now, what is buy stop? Buy stop is the process of buying above market price. Sell stop is the process of selling below market price. So let's take a step further. Now, this is trading platform. Okay, this is what? Trading platform. What is trading platform? Trading platform is simply the place where you go through trading activities. That is why we call it trading platform. And I dropped it in the group where I said download so thing. I told you to download Trading View, download Zoom, download MetaTrader 5, and all that. So what I told you guys to download is simply called trading platform. That is, before you buy or sell, the place where you are going to buy or sell is what I told you to download. So if you don't download it, and maybe you are a Forex enthusiast, you want to know more about trading, you want to undergo trading, there is no how you can do anything because those are the tools that we use to trade. Those are the tools that we use to buy country currency pairs. Those are the tools that we use to sell country currency pairs. All right. So as you can see here in the screen, we have tools and software, MetaTrader 4 and 5, Trading View, and we have CTrader. These are just simply what? They are simply called tools and software. Now let's now go into brokers. Let's go into broker. Now, choosing a broker. Before we talk about choosing a broker, what exactly is a broker or who are brokers in the market? Brokers are like your banks. Brokers, they are like your what? Your bank. They are like your first bank. They are like your UBA bank, your Union Bank, your Sterling Bank, your Access Bank. They are doing the same thing as what? Brokers. That is, brokers are your liquidity providers. They are your what? Your liquidity providers. They are the people that is giving you that platform for you to be able to buy and for you to be able to sell. That's it. If you don't have a verified broker, if you don't have a broker that will give you access to buy and sell and you make money, then if you don't have access to a broker, then it means you can't do anything. Anything you are doing here is just a waste of time because you need them for you to buy or sell. Just like how you need your normal local banks for you to go through, for you to undergo transactions. You want to save your money, you want to send money to your family, to your sister, your brother, your girlfriend, your boyfriend, your wife. Definitely, you need your what? Your local banks to send Naira, right? Same way for you to trade. You want to buy Euro USD, you want to buy GBP USD, you want to buy NASDAQ, you want to buy S&P 500, you want to buy US 30, you need a verified broker. And if you are not careful, you are going to fall into the hands of scammers. I repeat, if you are not careful, you are going to fall into the hands of what? Scammers, especially newbies, especially if you are someone that you don't do your research, you are just easily propelled when someone tells you something, boom, you just believe, you not do your own research and check, okay, is this person legit? Who is this person? Blah, blah, blah. So, the same way they are legit brokers is the same way they are scam brokers. Scam brokers, you make money, you cannot withdraw. You just be seeing your digit there. You be seeing your digits, but you cannot withdraw. All right, you be seeing your digits. You can't have access to your money. You place withdrawal, nothing. But a verified broker will give you access to your money. Any profit you make, you can pull out your profit, you can deposit, and then they are good to go. All right, now these are the qualities of what? Brokers, regulation and trust, fund safety, they are securing your funds. Remember, I said that in trading, you are buying something in exchange for another thing. So you are bringing money into the place. So if you are someone that you don't know how to take risks, you are not someone that you maybe your risk appetite is zero. You have no business being a trader. Just go and find something that you know that everything in life is risky. That is the fact. That business that you feel you want to do is also risky. There's risk everywhere. There's risk everywhere, right? Just that you have to choose the risk that you want to venture into. That is it. There's risk in oil and gas. There's risk in normal business. Anything, anything can happen to your business. You can have a fire outbreak, and then everything you built goes down that day. That is how it is, right? So business has to do with risks. So you choose your risks. Life itself is risky, right? Life itself is risky. So you have to decide as a newbie, okay, this is the risk I want to choose for myself. I know that this thing can work if I give it my time, if I learn the skill set the right way, if I have the right mentor to guide me through the process, I know that this will work. If yes, then you proceed further. If no, do not proceed further. If no, do not proceed further. All right. Now, broker gives you access to what? Your fund safety, low spread, commissions, deposits, withdrawals, everything that has to do with trading. Your broker are in charge of it. They are your liquidity provider. They are the one that is they are giving you the liquidity for you to buy and sell. All right. So the broker I can recommend for you is the broker I use. Okay, which if you click here, I don't know if I'll drop the PDF. My broker is if I click here, you have access to my broker. Okay, it's called HFM. So I will drop my link later when I'm done with the call. You check out the broker. You read only for Forex enthusiasts. Please, if you are not a Forex enthusiast, you don't have business. So don't come and stress me. I don't trading alone has its own stress. Don't add to it. If you are someone that yes, you like you are interested in trading, you want to proceed further, you want to learn more, you want to my Telegram channel can teach you everything that you need. It can teach you if you are someone that you are ready to put in work. My Telegram channel is there for you. I have the free one, I have the paid one. So if you know you don't like to, there are people that are very rigid. You don't like to pay somebody to teach you, go to the free one so that you not stress anybody. There is free one for you so that if you like Osho, they know that Nigerians like Osho free, right? So the free ones are there for Osho free. You will learn. There's value there. All my platform, I give out value. So do your research and research on me, do your research very, very well so that you show that, yeah, these guys know what he's making reference to. All right. So the broker I use is called HFM. They are verified. They are good. I can vouch for them because I use them. All right. So I'll drop the link so that you can check them out and then you proceed further with them. So that is broker. So if you want to proceed further in trading, you want to learn more about trading, then you need a broker. Without broker, you can't do anything. Just a simple waste of what? Of time. So that is simply who brokers are in the markets. All right. Now, this is for day two. So this is where day one ends. Now, I'm going to go to the charts. I will go to a platform called TradingView. This platform here, I'm going to go to this platform now, so that I can show you the interface of TradingView, so that you can see what this stuff is all about. All right. Now it's becoming very, very interesting. Okay, it's becoming very, very, very interesting. Now let's now go further. This is for day two. This one here is for day two. So day two, I'm going to talk about all these things, what moves the market. I'm going to do some technicals and the rest. So for now, let's finish up with day one, which is today. Now I'm going to pull up my trading view. Now, what you see here is simply called trading view. All right. Don't be scared. Don't be scared. Don't be scared by what you see. This is called trading view. This is called trading view. Now, let me go to the home page. This right here is the home page. Network, please don't stress me today. Okay, please stay with me, stay with me, stay with me. Okay, loading. All right, thank God. Let it finish loading now. Okay, very good. Now, as you can see, this is called trading view. This is called what? Trading view. Now, what do we do with trading view? What is the importance of this thing that tells you look first? You can see that they are giving you sound warning. They are giving you sound warning. Yeah? They told you look first, then leap. You know, look, that is, let's say you want to open door. You want to open a particular door. You don't just open the door and just enter. No, you open gently and check what is inside this. What is inside? Yeah, or you knock before you open the window. That is what this look first is trying to tell you. Meaning, go through the learning phase first before you decide to what? Buy or sell. All right. Now, this section here is called the marketplace. You can see markets. You can see that we have different markets. We have indices. Indices, like we have, these are the types of indices that we have. We have S&P 500. We have NASDAQ. We have US 30. We have Japan 225. We have FTS 100. We have DAX. We have CAC. These are indices. They are called marketplace. Okay, they are called what? Marketplace. Then we have crypto like Bitcoin, Ethereum, USDT, Binance, USD Coin, SRP, which is Ripple. Those are just the different types of crypto that we have. We have futures like silver, copper, platinum, crude oil, natural gas, gasoline. They are called what? Futures. We have Forex. Forex like Euro USD, GBP USD, US 30. Sorry, US 30 is not Forex. AUD USD, USD CAD, USD CHF. Those are what? Those are Forex. Then we have government bonds. Government bonds like Euro, UK 10Y, German 10Y, France 10Y, Italy 10Y. Those are government bonds. We have corporate bonds, we have ETFs, and we have economy. These are the different markets that we have. So when you learn how to buy and sell, you will not decide, just like what I said earlier when I started the class. I said, when you've gone through the learning phase, you've developed the skill. Please, you have to know, you have to develop this. It's a skill set. There's no difference between what I'm teaching you now and someone that is trying to learn tech. It's the same thing. If you are learning graphic designing, you are learning website designing, you are learning what do you call this thing? Cyber security, right? Those one falls under tech. You have to go through mentorship, you have to go through learning process before you become maybe a cyber security and all that. You have to go through those things. Before you become a website designer, you have to pass through learning phase. So don't think Forex is different from them. No, just that people or these scammers that are everywhere, they are selling the wrong mindset to many newbies. That's why somebody will tell you, and you come into trading in less than one week or 2 weeks, you start making millions of naira. Okay, all right. Just know that, please learn how to do it first. Focus on the technical know-how. You are newbie, I know what I'm saying, so that you will not make your journey longer. Now, speaking to those that are interested, so that if something is meant to take you 6 months or maybe 3 months to go through rigorous study, learning phase, and you become a better trader, it will not take you maybe 6 months. Sorry, maybe 6 years of, because there are so many people that have been trading for 5 years and they are not yet profiting. Some people have been trading for even 4 years, they've not even withdrawn $1,000 or even $500. Why? Because of what? Wrong mindsets. They are being sold the wrong aspect of trading. And that's why so many people will tell you trading is a scam, blah, blah, blah. Why? Because of they are falling into the wrong hands of people, which I don't blame them. Imagine as I started the call, somebody already started dropping link, which is very, very not impressive. And it was unfortunate I couldn't even picture there's no how I can detect who the person is. That is bad. That's very, very bad. And imagine the people now that are very vulnerable. Imagine them clicking the link and probably they will be sold a different thing entirely. Because for someone to come and spam in another person's platform, that shows that you are a scammer. You are a big scammer. And don't do that. Learn, go through learning phase. There's nobody that will tell you can't do it. You can't do it. If you give trading 2 months, 3 months, 4 months, 5 months, 6 months, there is no how you will not be good at it. It is not rocket science. Just know the technical know-how, the psychology behind things, and you're good to go. All right. So this is the interface of what? Trading view. This section shows you the price aspect of things. It shows you the price. You can see that these were the prices I highlighted. The asset I highlighted. That's why you can see the price here. Okay, now let me just scroll to one aspect. Now let's go to the charts. Now, this is called a chart. We call these charts. Okay, we call these charts. Now, what chart is this? This is a chart on Euro US dollar. That is Euro USD. This is a chart on Euro USD, which is Euro against United States dollars. A chart of euros against United States dollars. Now, what are all these things? All these things that are going up and down. What are they called? All these things here, what are they called? This is simply called your what? Candlesticks. We call it candlesticks. Okay? We call it what? Candlesticks. These things you are seeing that are going up and down, they are called candlesticks. So this is what you learn. This is the thing that you are going to learn for you to be able to make money from trading. It's not difficult though. Don't feel it's difficult. Yes, trading requires a whole lot. Okay, that one we'll talk about the psychological part of things. Okay, but you need to understand the technical. You need to understand how 1 + 1 is equal to 2. You need to understand how to prove that 2 can be found from 1 + 1. Okay, now in the charts, We are making money from the fluctuations of these candlesticks. That is how we make money. We are making money from what? The fluctuations. From where? From this movement. That is how every trader makes money in trading. Whether it is indices, whether it is stocks, whether it is crypto or whatever, this is how we make money from trading. That is, we are studying all these candlesticks here. We are studying all these movements with a defined methodology, with a defined approach that tells us that when price gets to this psychological level, you can buy. Or when price gets to this psychological level, you can what? You can sell. Maybe to this level, you can what? You can sell. So you knowing how to buy and sell means you now have to learn a defined strategy that suits your psychology. That is why some people are not even yet profitable. Why? Because they keep jumping. They keep jumping. If you have colleagues that are trading, or you have friends that have engaged into trading, the ones that are not even yet profitable, notice that most of them, they keep jumping from one thing to another, thinking that there is a holy grail, neglecting the fact that they are the holy grail. And take note, trading exposes your bad habits. Trading exposes who you are. So if you are someone that is very greedy, just know that trading will expose you. Just know that. See, you cannot even hide it. Trading will bring out your real character. You see that real person that I'm very sure, see, many of us, we don't even understand ourselves. And the only hustle that I know that can bring out your true character, if I stay with any of you guys here for, let's say you trade with me, let's say you trade with me for, let's say, 3 months. No, I think 3 months is too much. You trade with me for 2 weeks or 1 week, I can be able to know the type of person you are. Why? Because trading exposes your inner self. If you are greedy, trading will expose you. If you are impatient, trading will expose you. If you are aggressive, trading will expose you. If you are not calm enough, trading will expose you. Okay, so understand these little things. Those are the things you need as a newbie. Those are the ingredients you need to know. These are the things you need to hear. Then you now start asking yourself, am I ready for this journey? Do I want to go through this journey? And if yes, good for you. If no, don't test the water. I know what I'm saying. Okay? Don't test the water if you are not ready. So we make money from the fluctuations of these candles. Now, using this as a case study, remember I said that the buyers in the market want market to buyers in the market, please remember, just mute your mind. Buyers in the market want price to go up, right? Now, let's say I'm making use of this structure range. I'm making use of this structure range low and high. What is a structure range? A structure range is the distance between 2 points. A structure range is the distance between 2 points. So if I label this as point A and I label this as point B, it means that this is what I am making reference to. Now, understand that the market is very fractal. The market is dynamic. The market can be broken down into various entities. That is why how you zoom determines what you will see in the market. The gadget you are using will determine what you will see in the market. For instance, if you are using your phone to analyze, you should not compare your analysis with someone that is using a laptop. Why? Because the inches differs. Your laptop might have a more bigger screen than your phone. Your phone has a smaller screen. So you can't compare the both of them. If you are using an iPad, you cannot compare what you will see with your iPad with what you will see in your phone. And if you are using a big screen, a big trading monitor, gaming monitor, let's say you're using an ODC, right? You will not compare what you see in your ODC that is over 50 inches or 40 inches with what you will see in your laptop. It is not the same. Okay, it is not the same. So how you zoom really matters. For instance, look at what I will do now. If I zoom out like this, can you see that I have removed that area that I showed you before? Can you guys see? I've removed it. Now, this zooming out I just did now, this is a different story entirely. If I want to analyze the markets and I want to determine if I want to buy or sell, this alone is a different story. If I zoom in now, I have now reduced it, meaning that this is what I want to pay attention to. This is my major focus. Now, for me to now pick a structural range, it means that this is what I am paying attention to. From this low that I marked A, to this high that I marked B. I have no business with whatever is happening here. I have no business with whatever is happening here. Why? Because this is what I am using as a reference point for you. All right. Now, what can we see here? We can see that the market is projecting to the upside. Can you see? It is projecting to the upside. This is projecting to the upside. So this is influenced by the presence of what? Buyers. Where I said buyers want markets to go up, long means to buy, short means to sell. Now this is going up. It means that this upward movement is being projected by what? Buyers. Then if I invert my chart, inverting my chart means I'm turning my chart upside down. So all you have to do if you are using a laptop or your monitor, just press alternate I, it inverts your chart. Now I have inverted my chart. What can you now see? This is still the same trading range from year to year. This is now projecting to the downside. So this one is what? Sellers. Because it is moving to the what? To the downside. Do you see the difference now? This one is buyers. Why? Because it is moving to the upside. Now, look at this. Let's say I zoom in further. Now, this is what I want to show you. Now, is this market going up or down? This is a ranging market. Why? Because it is neither going upward nor going downward. That is, market is just ranging. Look at it. It's just ranging. This is what we call ranging market. Tomorrow, we are going to discuss about support and resistance, and you need to understand it much better. But for now, just pay attention to buyers and sellers. Buyers want market to go up. Sellers want market to go down. So this is also an example of a bullish market. A market that is projecting to the upside. This is an example of a bullish market. A market that is projecting to the what? To the upside, making series of higher highs and higher lows. Now let me just briefly show you example of higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high. Sorry, you might want to ask, why did I pick this low? Don't worry, this one is more this is more intense. That is, this one is a bit, I don't, it's a beginner's class, right? So I'm supposed to make it as simple as possible. I'm not supposed to start scaring you with some things that you're like, this is rocket science, blah, blah, blah. Some people will be scared. No, I don't do that. Okay, this one has to do with internal structures, me talking about internal highs and lows, not for this class. Okay, so just take note of, you see, price broke structure to the upside. You can see, broke structure to the upside. Price broke structure to the upside here. See, broke it, another break here. See another break here. Okay. So, an example of what? An example of what? An uptrend. Okay, this is an example of what? An uptrend. Price breaking structures to the upside. So if I say, let's assume that I told one of you guys here to long Euro USD, okay, at this price. Now you want to long Euro USD, and let's say I bring out my long position 2. That is a 2 that is telling me, okay, this is the 2 I will use to long, the 2 I will use to buy. All right. And let's say I told you to buy from here, and market started going up like this. It means that you made money. You are making money. But let's say I told you to buy from here, and market came down here, what do you think will happen here? You've lost money. So at this particular point in time, you've lost. So based on the risks you use in entry this trade, you've just lost the money. So you see that you might lose money here, another trader might buy here and make money. So you now need to understand technical analysis, because it is now technical analysis that will now teach you that, okay, oh, if price gets to so price, let's say price gets to this
Like we
area,
are not go 1 hour already. What you want to understand for you?
mute your mind. Hey, yeah, now you're the one disturbing my call. You're the one disturbing my call. Mute your mind. So let's say that this area here, let's say I told you that, okay, buy from 1.14452. This section here is called the price. This is called price in the marketplace. This is trading view. The right axis is your price section. The horizontal area, this is vertical. This is vertical. The vertical axis is your price. The horizontal area is your time, or we call it events. So you are trading price against events or time. If I put my cursor here, you can see that this is showing Wednesday, 18th of March, 2026, around 2 o'clock, right? So this is an event. If I put my cursor here, this is showing the prices of euro to dollars. This section here is showing the prices of euro to dollars. So it means that at this particular point in time, this particular day, which was on Monday, 30th of March, 2026, around 2 o'clock, which is 14 o'clock, the price of euro to dollars was at 1.14452. So it means that if you had gone to the bank to trade euro to dollars, this is the price that you are going to get. And any other price that will be given to you is solely for the purpose of making profits. Why do we do business? To make profits, right? So your bank always wants to also make profits. That is why the black market rates and your bank rates will never be the same. Your black market might give you a rate of, let's say, 1.4. Your bank might give you a rate of, let's say, 1,350. That difference of 15 naira is called what? It's your own profits, because you might buy low. You want to buy low now and sell high. That is normal market condition. Economics, this is economics. So if you're a commercial student, maybe you studied accounting, finance, and all that, it is a plus for you. I did not study it, right? I didn't study anything related to economics, right? But this is me finding myself doing it. So it's not hard. Normal market condition, buy low, sell high, right? So that difference in price, in rates, is for the purpose of what? Making profits from that transaction that you want to do. But the flat rate is this. And at present, you can see that on this particular month, which was March, the price of euro to dollar was 1.14452. But at present, the price of euro to dollars is what? What price is this? 1.17969. What have we observed? There has been an increment in price. Price has what? Increased in value. Euro to dollar has what? Projected to the upside. Now, how do we now calculate this projection? This is where pips comes in place, where I said the unit of measurement is simply called what? Pips. This should be my longest class. Oh God. How many hours now? Please, how many hours? I think we started by 8. Okay, 1 hour. I don't teach for long. I don't like long classes. I think one of my students is like, she will know that I don't like long classes. It's always very tiring. Right now, man, I've spoken for too long. Spoken for too long. All right. So how we now measure that movement is through pips. Now, how can you measure pips without cramming? Let's say you don't like maths. Maths is stressful. I don't like numbers. Look at it. You see the two here. This is called price range two. It's called price range two. I will make a video or rather, I think you can see it on YouTube, the interface of trading view. So you can always check that yourself. Interface of trading view, so that you can learn and know about the interface. Now, this is called price range 2. If I pull up my price range 2, it shows me the unit of measurement, which is the pips. So price moving from here, this low here, to this high, means price has moved 351 pips. 351.8 pips. That is what that means. Price has moved 351 point what? 0.8 pips. It means price moved 351.8 pips. So if you want to calculate your pips value, you can make use of what? Price range 2 as the unit of what? Measurements for you to calculate your what? Your pips in the markets. All right. So this is a brief explanation on the introduction to Forex day 1. This is a brief explanation on the introduction to Forex day 1. So if you bought here and price reached this area, you know that you are making money. Why? Because you are buying, you want market to move up, so definitely you are making money. As easy as that. So if you are buying and price is projecting to the upside, you are making money. If you are selling and price is projecting to the downside, you are also what? Making money. So this is where I'm going to end day 1 bootcamp for beginners. Now I'll open room for questions for just maybe 15 minutes, please, because I've spoken for too long, right? I will drop the video. I recorded the video, so I will drop it. I've said a whole lot so that you guys, those that are very much interested, can learn. Okay, please don't annotate on my charts. Please don't annotate on my charts. Now, question time, 15 minutes. So if you want to ask a question on one after the other, please unmute your mic, then ask your question.
Hello? Hello?
Yeah, go on.
Yeah, good evening.
Yeah, good evening.
Yeah, I have one question that I want to ask, and it's concerning the last thing you said. You said when the trend is projecting upwards, then you know you're making money.
Yes.
I want to ask, can I calculate? Is there where I can? Is it like would I predict that this trend is going to go upward, or there's a form of calculation or analysis that's going to take place before the projection is going to go up, or I'm just going to guess or predict that this thing is going to go up based on what I've seen?
Okay, now in trading, we don't guess. Okay, we analyze the market, just like what you said. Will you analyze? Yes, you analyze. Now you're analyzing based on your technical know-how, which some people call strategy. So you need to have a strategy. That strategy is what will tell you that okay, when price get to this area, I can look towards buying. When price get to this area, I can look towards selling. For example, in my community, I will drop my link to my Telegram. Okay, both my students and the people that are in free group. Okay, now if you join the group, you will see it. I drop this bearish projection for them. I used to have call with them at least every Tuesday. I drop my chart, I drop free trades there. Okay. Now I gave a projection that we're going to see sell from here. And price sold. Now I also dropped, yes, this trade here, I also dropped it that we're going to see sell. Even buy. When price started changing his narrative, I told them that we might now start seeing buy. And price bought on Friday. This was on Friday. On Friday, we had a bullish projection to the upside on Euro USD. Same with Nasdaq and US 30 and the S&P 500. I dropped those analysis with them. Now, how was I able to drop those things with them? It was because I have a system, I have a strategy, I have a methodology, I have an approach that I use to buying or selling. I will not come to the market and just guess. And this market should sell because probably I'm seeing a bearish candle. This is called candle. This thing you are seeing is called candlesticks. Okay, I will not just enter and say because I'm seeing a bearish candle, then I'll enter sell. No, there are rules of engagement, there are strategy, there are things backing up your analysis. Okay, there are things backing up your analysis. Now, those things that are backing up your analysis, they are the things that help you to know if you want to buy or if you want to sell. So in other words, you need analysis. You need analysis. You need a strategy to know if you want to buy or if you want to sell. So if you don't have a strategy, you cannot know where price will pass. You cannot know where price will buy from. You cannot know where price will
Okay,
sell.
okay. Yeah, I want to also know what methodology, what approach do you use
Now
to know?
I make use of that was meant for day two. That's actually meant for day two. I make use of trade structural analysis in relation to HRC, but that is for day two. Okay. Day two, I'm not
Okay.
here to teach you my strategy. I cannot teach my strategy in one day. It's not possible. So this is for beginners. The essence of this bootcamp is to liberate you, is to educate you on the basics and foundation of trading. That's why I said for beginners, right? So that
Okay.
when
Yeah.
you know what you're about to venture into, then if you like it, you go to my Telegram, you will see things for yourself. It's your choice. You will make your decision yourself. But it is simply for beginners. But I will give you guys some hints, some basic things that you can always work with. So we'll do that in
Noted.
day
Not,
two.
noted. Can I also reach you on Instagram?
Yes, I will drop all my platforms for you guys after the call. I will drop everything
Noted.
so that you can
Noted.
do your
Thank
research.
you. Thank you.
You are very much welcome. Next question, please. Next person. Next person. Next person.
Hello.
Yeah.
Thank you for this meeting. That was very enlightening. Two questions. How do you know that the market is manipulated? And the second one is I think it's also important to emphasize that what is happening in the Middle East is influencing the trading totally. And especially when the market opens, it's also important to know when the market opens. You know, different market open different time, like US and UK and China and Asian market. The timing is very important, so we know when to enter. But I think my major question is, how do you know when the market is manipulated? Because sometimes the market is actually manipulated by these platforms, and if you enter immediately, it falls. If you sell, it become bullish. If you buy, become bearish. So how do you know?
Okay. Very, very intelligent question. Yeah. Really like your question because your question will allow me to. I think I'm going to go deeper a little bit, just a little bit. Yeah. So you guys should just permit me. Now, first of all, yeah, let us be very honest and let's be factual right now. Yeah. There is nothing like manipulation in trading. Now, if I hit SL, meaning I hit stop loss, I lost money, right? I should be responsible for that loss. Meaning that you like before I started, that's why I explained some things where I told you guys that there are losses in trading. You can lose money here. This is highly volatile, this is highly risky. Now, let's assume that I wanted to buy here. Sorry, I wanted to sell from this area. And my point of invalidation was, let's say, this high. This was my point of validation. Now, market entered the area and price, sorry, sorry, me, sorry, I choked a bit. So let's say price entered inside the area. Then, instead of price selling, sorry, you just give me 1 minute. All right, sorry about that. So let's say I want to sell now. Price enters inside my zone. Instead of price selling, instead of price dropping, no, I want to sell. So it means I want market to come down, right? Instead of market to come down, market now invalidated my trade. Now, what just happened is that my analysis was wrong. Now, traders that want to deceive their audience, because see, you need to understand that the trading industry is a bit polluted. When I mean it's a bit polluted, it means that it is not everybody that wants to take responsibilities for their losses. Some people, you have seen that you are wrong. Why can't you just have that balls to say, okay, yeah, my analysis was wrong, my bias was wrong, and you move on to the next trade? Now, they will not tag it as manipulation. Bro, there's nothing like manipulation because someone else, that thing you are calling manipulation, another trader is buying in that area. Meaning that I'm trying to sell here, another trader is most likely buying from this area and most likely targeting this area that I'm trying to sell from. Why? Because of liquidity. Liquidity is what moves the market. Imbalance is what moves the market. The intersections between buyers and sellers, the overlapping of buyers and sellers, those are the things that makes market to move from one structure point to another structure point. So if you don't know where the money is, if you don't know where the liquidity is, there is no how you'll be right at that particular point in time. If your directional bias is not intact, you don't know if you are bullish, you don't know if you are bearish, you don't know if it is buyers that are responsible in that particular point in time, then what do you think will happen? You will lose money. And once your directional bias is wrong, that is, you don't know if you have to buy, you don't know if you have to sell, you will lose money. It's not about manipulation. Now you have lost money. So there's nothing really, if I want to be very honest with you, there is nothing about manipulation. Let's be honest here. You are wrong, you are wrong. Hit your stop loss, move on to the next trade. Okay, then about your broker's pricing. Now, brokers gives you their liquidity. Okay, they give you their liquidity, meaning that the pricing of one broker might not be exactly the same with another broker, but it has to be because they have bodies that are watching them, right? They have bodies that they are being regulated. Okay, they are being regulated. So their difference don't have to be much. Just like if someone is giving you a rate of one, let's say someone is giving you a rate of let's say 1,375. Another person is giving you a rate of 1,374.5. You notice that the difference is not much. Difference of like 0.5, right? Difference is not much. So that is how it is. So brokers can have different prices, but if you are buying, market is selling, you are wrong. It's not about manipulation. You are wrong. It's just how it is. But if I want to sound like a perfect trader, yeah, maybe I want to sell something to you. I want to put myself like one kind very big trader. I'll tell you that I was manipulated. Nothing like that. My analysis was wrong. That is just the truth.
Thank you.
Yeah, you're welcome. Next question. Next question. Next question. So in the next 10 minutes, if there's no other question, I will end the meeting. Next 10 minutes, if there's no question, I'll end.
Yeah, I have one more question.
Okay.
Concerning brokers. How do I know a broker, this broker that I want to do a trade with is legit? And how
Okay.
do I come in contact with a broker?
Okay. Very good. Very good. Now I will drop the broker I'm using. I'll drop the link for you. Okay. You register first. When you register first, don't go and deposit immediately. First register first. When you register, then do research. You can go online, check. Okay, this broker that this guy spoke about. My name is Casey, trading with Casey. This broker trading with Casey spoke about. Let me see if they are verified. You go online, check how many years they've been on operation. Okay, because they've been on operation since, so they are very much legit. You cannot even check other traders that are using them. There are so many traders out there that are using them. So many top traders. If you are someone that is very active on X, there are so many big traders on X that are even using them, that are even affiliates for them. So they are very legit. So you have to do your own little research. And you do your research on me too, right? So who is this person that is even teaching us? You check my Instagram, you check my Telegram handle, watch my videos. My videos are there, even on X, you check it and say, okay. If this guy is verified, if this guy is good, if this guy claims that okay, he's using the broker, then he should be legit for him to be using the broker, right? So you not just use broker blindly because somebody told you about it. You do your own little research and be sure that okay, yes, they are good. But They are 100% legit. No scams on there. If you deposit with them, please, you need to go through some level of trading. So if you know how to buy and sell, you know when to buy and sell, okay, then of course they are legit. If you make money, they will pay you. In fact, the moment you even register self, you'll be assigned to a manager that will follow you up and be sure that everything is working fine with you. So you don't have an issue. They are 100% legit. 100, they have a branch in Lagos. They have a branch in Lagos. They have a branch in Port Harcourt, and so many branches in Abuja also. So they are very much like you can always walk to their office. And again, another way to know brokers that are legit is brokers that have branches. Me, I prefer brokers that have branches too. Do you get so that if there is any issue that is beyond online, right? If there's any issue that is beyond online, I can always travel to their office or I can always go to their office and lay my complaints. So yes, they have office and they are regulated. No issue with that. As long as it's coming from me, no issue. So next question.
Noted.
Yeah.
I have another one too.
Go on.
You said learning of FX is a
Yeah.
skill set. So now with this skill set, now can I transfer money maybe from one country from one currency to another currency? Maybe if I'm not in Nigeria, for instance, and I want to transfer money to another country, can I do it by myself without any intermediary?
Yes, you can, but that one now is a different aspect of what you are learning here. Hmm? That was a different
Mm.
aspect. It's just like I don't know if you know about this app called Yellow Card. Yellow card is mostly used between all these African countries. For example,
Yeah,
you have a family in, let's say, Kenya. You want to send the person shilling. You can easily convert your naira to shilling and send to the person through the person username. Now, that one is just an application for sending money. Okay, it's just like now you want to, you know that if you are trading crypto now, if you are familiar with all these our Bybit, Binance, and the rest, you know that in Bybit now, yeah, I can decide to buy crypto as spot trading. That is just as real estate is. I can decide to buy a piece of land, hold it for maybe 3, 4 years, wait for it to appreciate in value, then I sell, right? So that I buying, reselling high. In crypto, in those platforms, I can also perform that aspect of trading, which is called spot trading. That is, I'll just buy a coin, hold it, right? Then when it appreciate, I sell off. Then I can also undergo normal trading. That is this thing I'm showing you now, which is called futures in crypto. If you want to make use of those applications, right? So that one you are making reference to is a different niche entirely, just more like an application for sending money. It is different from you analyzing. What we are doing here, we are analyzing, we are predicting market movement before it happens. Do you understand? We are called speculators.
noted.
Yeah, we are called speculators. So we are speculating that, oh, if price get to this area, dollar will dump. So before that thing will happen in fundamental, before dollar will increase in value, as a trader, you will know. And that is why if you are good in analysis and you are in crypto trading, you will make more money than somebody that is just buying crypto without understanding how to analyze the market. Why? Because you are analyzing. You know when to buy. You know when to sell your Bitcoin. You know when to buy your Bitcoin and you know when to sell based on your technical analysis. And these things are also influenced by fundamentals, just like what the previous person asked, right? Fundamentals can have an influence in the market. What is fundamentals? They are simply called news, the release of news. If Elon Musk tweets something out on Twitter and he says something positive about Bitcoin, you will notice that Bitcoin will start pumping to the upside. Why? Because it's very influential, right? Everybody now will start buying Bitcoin. And the moment there's so much pressure of demand than supply, it appreciates in value, right? It's appreciating value. So that one is called fundamentals. Now, as a technical trader, before that fundamental happens, you will start seeing those signs on charts. And what are the signs? These things that your candlesticks are printing out for you. And that is why in forex trading, we still have fundamentals. We have news release. We have what we call NFP. We have what we call CPI. There are so many things. I'll show you maybe tomorrow. I'll pull up the where you can check for fundamentals and you see the release of news and the assets or currencies that are being affected by that news. So that is how it is. Next question. Victory, you're raising your hand. You want to say something?
Yeah, good evening. I want to understand something. What's
Yeah.
the relationship between leverage and lot size?
Your voice is a bit low. I can barely hear you. What did you say, please?
No. I said, what's the relationship with leverage and lot size?
Okay, relationship with leverage now. Okay, very good. Now, when we talk about leverages and lot size, we have to talk about MT5 interface, right? Because that one now is the practical way of executing. For instance, I want to buy here. Hmm? I want to buy at, let's say, at this level. I want to buy, meaning that I want price to go up, right? Now, for me to execute this trade, first of all, I need a broker, which is the broker I will send for you guys. I'll send you the link, you register. So you need a broker for you to take this trade, right? Now, after registering with your broker, you need another platform for you to now trigger. Trigger means execution. You executing the trade. That is, you will tap buy or you tap sell in that trade MetaTrader 5 or 4. Do you understand? So you are registering with your broker. Your broker will give you login details for your MetaTrader 5. So that MetaTrader 5 is now where you now execute your trade. Then if price now goes up, you now make money. When you now make money, you now go back to your broker, place your withdrawal to your bank account or your wallet address. So for me to perfectly now explain that lot size, because under lot size we have standard lot, mini lot, micro lot. That one is for tomorrow class, right? That one now you now have to go to your MetaTrader 5, impute the mini lot, execute your trade. It's very simple, yeah. If I will send you guys videos, or maybe on Monday, maybe I will keep the group alive till maybe Friday, because I don't want the group to just be like that. I just people that are only that I'm mostly interested because there are so many scammers there, I'm very sure. And I don't want to have any relation with them, right? So what I will do is I will sacrifice Monday to Friday. I will just do some practical examples. When I'm in a trade, when I'm about to enter a trade, I will screen record with my phone. Okay, you will see the profits, you will see the losses, you will see the fluctuations, you will see how it is fluctuating so that you will learn. Then I'll give you some videos to watch. You can even go to YouTube, go to the platforms on executing trade, you'll see everything there. I'll do everything for you so that you understand the practical aspect of things and we'll proceed from there. Okay, so lot size and margin or leverage, it's more of practical examples. What I just gave to you is the theoretical examples. All right?
Thank you. Thank you very much.
Yeah. So I believe I'm exhausted at present. So I think this is where we'll call it a day for today. So tomorrow we're going to day 2. I'll teach you support and resistance. I'll teach you some other things about trading, and then we are going to proceed from there. So don't miss day 2, because that is the last day for this bootcamp. Don't miss it. Okay, don't miss it. Try to be available. I'll drop the timing. I'll drop my social media handles. I'll drop everything for you. So you do your research today. Check me out on all platforms. Then if you like what you see and you want to learn more from me, then of course you're free. But don't miss day 2 so that you learn all the basics of forex trading. Very, very important. Please. Okay? It's a skill set, guys. It's a skill set. So take care, good luck, good trading, and have a wonderful night rest. And bye for now.